This podcast is not operated by an organization, but is an independent solo project run by me. It costs me considerable time and money to make Copytraders Club, and you can ease that pain by making a small $3 per month contribution at patreon.com/copytradersclub. I've kept the price deliberately low to make it an easier yes, even if you have not previously supported anything in this way. Maybe this time it's different. It only takes 2 minutes to sign up and become an official supporter of Copytraders Club. Patreon.com/copytradersclub. Thanks for listening and thanks for your support. Copytraders Club, where you can learn how to make better decisions and more money copy trading. I'm Gavin Macaulay, my name and username on eToro. Today, we talk to a dividends-focused popular investor from the Philippines, where eToro is surprisingly big. Here we go. Season 2, Episode 15 of the Copytraders Club podcast, and as always, my aim as an eToro enthusiast and copy trader is to demystify this new and uncharted world of copy trading, understand what are the pitfalls and best practices, and how ultimately to succeed as a copy trader. In chats like today's, the aim is to answer all your questions about this popular investor and reveal more about them than anywhere else, so you can assess whether they might suit you. In this episode, we talk to Mark Fernandez, aka mjtfernandez, who arrives at the Copytraders Clubhouse all the way from the Philippines. I can see him now exiting the limousine, champagne glass in hand. Mark, kamusta ka? Maligayang pagdating sa Copytraders Club?
Yeah, thank you, Gavin, for this time that you've given me.
Well, thank you for being here. It's good to have you.
Yep, I'm excited.
And we're excited to get you into the clubhouse via a series of quickfire questions to clear security. Ready?
Okay.
Username on eToro.
mjtfernandez.
Date you joined eToro.
October 2020.
Date you became a popular investor.
August 2021.
Year of birth.
1988.
Place of residence.
Currently in Dumaguete City, Philippines.
Profession.
I'm a CPA, but I own some other companies. I don't practice the profession anymore.
Briefly state what you aim to achieve on eToro.
Well, my goal is to help people who are not able to invest properly in the stock market get returns. It's more of inclusivity to have people, especially in the Philippines, invested in the stock market.
Name one of your investing heroes.
Warren Buffett.
Name one of your favorite investing books.
The one with Mary Buffett, The Interpretation of Financial Statements.
That completes the formalities. Let's proceed now into our VIP section here at the clubhouse. The magnificent surroundings of the Copytraders Lounge await you. Mark Joseph Fernandez, aka MJT Fernandez, are you ready for this magical transition?
Yep.
Okay, Mark, here we are now in the inner sanctum in the Copytraders Lounge. It's great to get you finally here.
Thanks for having me inside the lounge.
Well, it's a far cry from Dumaguete, where you say you currently are. That's where you're from, isn't it, in the Philippines?
Yep, I'm here in Dumaguete. Ever since I graduated, I've been in Makati. I've been working there for several years, and then when the pandemic came, we decided to go back to where I spent most of my childhood, Dumaguete. So we're actually here since everything's online. So We're be doing all our businesses here in Dumaguete.
Well, Dumaguete is a much nicer environment, isn't it, than downtown Manila?
Well, there are things that you can enjoy in Makati that are not in Dumaguete. For example, the nice big malls that there and the food and a lot of choices. Unlike in Dumaguete, it's really just a few choices and So I miss Makati sometimes. I miss Dumaguete sometimes. So sometimes I go just visit Makati and then Dumaguete. Just go back and forth.
Yeah, well, I've actually been to Dumaguete before.
Nice, nice. How was your experience?
Well, I didn't stay long in Dumaguete itself because I was going to Siquijor for diving.
Well, Dumaguete is really home for a lot of tourists, and I think it was one of the most popular retirement spots or destinations in the Philippines, if I'm not mistaken. There's a lot of expats and foreigners here in Dumaguete.
Yeah, I've also seen that on YouTube, actually. There's loads of old American guys who are seeing out their retirement, living cheaply in the sun, enjoying their life in the Philippines.
Yeah, yeah. Actually, that's the advantage here. It's very cheap. And like Makati, like prices there are like times 3 or times 4 the prices here in Dumaguete. So there are advantages and disadvantages being here in Dumaguete.
Yeah. I've been to the Philippines many times for scuba diving, all over the place. I did my dive master course in Boracay, not because the diving is great there, but because it's such a cool island, a great place to stay for a couple of months.
Nice, nice. Well, I was thinking you might have done. I thought you were in Apple Island because it's one of the famous diving spots here in Dumaguete.
Yeah, well, I have been there, and Puerto Galera, Anilao, Bohol, Cebu, and Subic Bay, I think, completes my list. So quite a good range.
Cool, cool. That's nice.
Okay, so it's a big day today in the Philippines. You've just come back from voting in the general election.
Yes, it's actually our presidential elections. Lenny versus Marcos. I don't know who's going to be the president, but whoever wins will have to respect the decision.
I see Marcos's running mate is the daughter of Duterte.
Yep, Sarah Duterte.
Okay, let's move on to some topic we're a bit more comfortable talking about, which is eToro.
Okay.
eToro seems to be very popular in the Philippines. Is it?
I would say it's not very, very popular, but it's popular. It started during the pandemic. In fact, I knew of eToro during the pandemic only because at that time there was this really a drive by eToro to increase the membership for Filipinos, and they gave this incentives to Filipinos that if you refer someone, there's this some sort of incentive, and so all my friends who are who are already invested in eToro, they contacted me and said, "Hey, try eToro," and so it really spread like wildfire for some people here in the Philippines. But it got tempered. The incentive was paused. So eToro is still growing organically. I think most of the growth comes from some popular investors who really want to have people invested in eToro.
And what do you think it says about the Pinoy character and approach to finances that makes eToro such a popular platform?
Well, I noticed that most Filipinos are really into immediate gains or returns. And I could say that because when there was a large correction in the market during the start of the Ukrainian war, I lost a significant number of copiers. I had almost 400, and now it's around 300. So I'm just wondering why all of a sudden everyone went out when, I always tell them that you should be investing when everyone's afraid and you should be taking gains when everyone's excited. So I was thinking that they would be investing more. But that's how it is. Most Filipinos are like that.
Well, I think that's a very common story for many PIs on eToro, that people jump ship and jump to a green guy as the savior.
Yeah, yeah.
on a short-term basis, but we'll talk about that later. Let's talk about how I came across you, Mark. Been looking forward to having a Filipino guest on.
Okay.
And probably the best known Filipino when it comes to eToro is Marvin Guermo,
Yeah, I think so. Yeah.
who has interviewed quite a few popular investors. Do you know him?
I know him. In fact, his brother is a good friend. He was there during my wedding, the brother of Marvin.
And Marvin's not a popular investor himself, but he's very keen on eToro and he loves talking about investing. He loves picking the brains of PIs, doesn't he?
I think so. But I think Marvin was really right now, if I'm not mistaken. Marvin is both a stock market guy and a crypto guy. So he's really into those things.
Okay, well, let's get to know you a little bit better, Mark, when I ask you to tell us something you're very bad at.
Ooh, something I'm very bad at. Hmm. Well, I don't really like seeing my face in front of the camera and, giving talks or, but, but I do give talks face to face, which I'm not afraid of. I tried starting a YouTube channel, which I currently have, but it's really hard for me actually to produce the videos because if I see my face, I usually get irritated or annoyed. So I don't usually get to really produce a lot of videos, but there's a lot of ideas already in place. So that's something I'm not good at. I think I really wanted how I wish if I could really be better in making YouTube videos.
And not getting annoyed by the sight of your own face.
Yes.
All right, great. Now, let's have a question from the art of people. Can you give me a number between 1 and 10?
10.
How would your favorite teacher describe you?
My favorite teacher would be happy to see where I am right now. I think they wouldn't have thought that someone like me could be where I am because I worked as a working student for 4 years to finance my college, and they wouldn't have thought that I would have 5 companies and also be a popular investor. So I'm sure they're proud of me.
Okay, and well, the question is, how would they describe you?
Right now or before when I was still...
Probably before, what were you like as a kid, sort of thing.
I would say I was quite always in a hurry because I was working and studying at the same time. I would like to believe that they would think that I'm good in certain subjects like economics or strategic management or finance. But I'm not really good at accounting, which is my major. But I was more on the other minor subjects of my course, which is more on economics and finance. So I would say they might have been wondering why I was really more interested on subjects that are not related to my major than subjects related to my major. So maybe that's how. I don't really know how they would describe me, but I'm sure they would say I was always in a hurry.
Okay, Mark, you have your eToro profile open in front of you. Can I ask you just to read a little bit from your bio, just from the start down to the paragraph that ends, buy low, sell high?
Okay. I'm the top one most copied popular investor in the Philippines that specializes in 100% dividend stocks. The composition is 40% in the US, 35% in the European markets, 25% in the Asian markets. I do not invest in exchange traded funds, forex, or crypto. I've been investing in the stock market since 2010, and as a CPA, my special skills is reading through company financial statements. I select companies that have good future net income. Investors should stay invested for at least 2 years to receive good dividends and ROI. Don't keep checking your short-term gains or losses. you just have to keep on buying low and selling high.
Okay, so you're the number one most copied PI in the Philippines
For dividend stocks, yeah.
for dividend stocks.
Yeah.
Okay. Okay, so we'll talk a little bit more about your approach in terms of dividends. For now, let's have a quick look at your overall results for the past couple of years. Explain those to the listener. As you say, you joined in October 2020, so there were only really 3 months there that finished pretty much flat. 2021, you had 27.58%.
Yep.
And 2022, year to date, at the time of recording, minus 10%. So
Yep.
it's not nice to see, but could be a lot worse.
Yeah. It wasn't really nice to see. Most of the damage was due to some Russian stocks that I didn't really think would be affected. But if you take a closer look at the Russian stocks that I have right now, the valuation of those stocks are really good. And in terms of the dividend yields, it's also really good. Currently, the dividend yields are at 20 or 30%. So I was just not planning to sell those Russian stocks because if I sell it, I won't be recovering as much anyway. But the fact that these Russian stocks are still paying out dividends, it gives me hope that things will be better maybe once the war ends or once these companies are admitted back to the global financial system again.
Okay, we'll get into that all a little bit later on. For now, let's just run through your headline stats on eToro. Risk score?
Risk score is 5, but it was always 4, but now it's 5.
Yes, when I look at your trailing 12 months, the story is very much one of average risk 4, max risk 4. But then in the last 3 or 4 months, like everybody else, it's crept up a little bit. So now in your most recent month, it's average 5, max risk 6. Is your risk score fair, do you think?
And my target risk score is really 3 or 4. So I think 5 is a little high for me, but it's not that high as it should be. But yeah, still okay.
And copier numbers and assets under management as of the time of recording, copiers 296.
Yeah.
You mentioned earlier you were up as high as maybe 400 or something.
Almost 400. Yeah. It's almost 400. It went down because of the market. Yeah, but later I'll share to you some insights as to why it's still good to invest in the fund.
And let me describe your copier graph. It's a very slow, so kind of steady growth, followed by what was clearly an editor's choice appearance, which got you up to close to 400. Then there was a bit of a drop off, but you've kind of leveled off. You're not declining, according to the graph. Tell us about editor's choice.
Yeah, I think the editor's choice was when the return was around 30% year on year. So I think that happened around February or prior to February, prior to the all these war. So when the war came in, the returns just went down. I haven't really thought about it really going too down because most of the stocks or 100% of the stocks that I own are dividend paying. So I was really shocked actually to see a significant drop in February, March, and April. But I think it was really because of the Ukraine war, and it's unfortunate really. But if you look again, the dividend yields, you'll see that some of the stocks that dropped really low are having dividend yields of like 20% or 30%, which I think it's relatively high. So long as those companies don't go bankrupt, I think these companies will really still recover in the future, especially that they're paying regular dividends.
And do you think that's a message that has gotten through to your copiers? It looks like it has to me because your recent graph is quite steady. And most PIs who are in the red in the past few months are seeing a decline as people jump to what they consider to be safe havens, i.e. any PIs that are green in 2022.
I think I do hope that they get the message. Just recently, we are giving out weekly insights. We're trying to compare the performance of the fund versus the other markets. So they'd be able to get a glimpse of whether the decline was really something that's market driven, or was it something related to the mismanagement or good management of the fund.
And do you have any idea what proportion of your copiers are from the Philippines?
I would say probably 60% are in the Philippines, the other, or 70. The other 30 would be from other countries.
And do you release information always in English, or do you do it in Tagalog, Bisaya?
I always no, I always release it in English with a mind that 30 to 40% of my copiers are not from the Philippines.
Okay, trades per week and average holding time. The stats here tell me 12 and a half trades per week and 4.5 months average holding time. How do you explain those stats?
So I do a lot of trading so that people who do not check copy open trades will still be able to maximize the return of their investment. Because if I don't do frequent trades, their available cash balance might not be properly utilized. And I also try to ensure that my trades are at least more than 0.5% of the total realized equity. In that way, the trades will be copied even by those who are investing at least $200. Like I said, I really am more on inclusivity. I think that investing should be available to all, regardless of whether you have a lot of money or not. So I try my best to allow inclusivity in the investing.
So do you think that comes from the fact that you're in the Philippines and the average salary isn't as high there as perhaps elsewhere, and you want to make sure that even those for whom a couple of $100 is a huge amount of money can be part of your activity?
Yes, and not just really that, because most Filipinos have not that much money to invest, but it's really more of a personal conviction that I too was once someone who didn't have much to invest. And so I feel that it would be unfair for people to not be able to invest. There's a lot of people who are rich. There's a lot of people who are also poor. So there's a very small amount of middle class. And so I think really inclusivity in terms of the growth, economic growth, and should trickle down to the masses. It's something that should be available not just for the rich guys.
You almost sound like a politician there yourself. Do you think we'll ever see you getting involved in Filipino politics in years to come?
I doubt that, but maybe my parents were politicians, so
Wow.
who knows? And my cousins, and who knows?
Well, one of the most important skills of a politician is communication. So let's talk about your communication as a popular investor. You have your own website. You also use Viber.
We have a Viber group.
Yeah, Viber. I think I downloaded Viber once upon a time, but is that one of the most popular social media platforms in the Philippines or something?
Yes. How about in Malaysia? What's the popular one?
Well, WhatsApp, I suppose.
WhatsApp.
Yeah.
I have WhatsApp, but I've never used WhatsApp as much as I should be. But we actually have other plans to strengthen the community. It's part of what we're actually doing now. We're doing some strategic management for growing the community. So I'm sure it's not just going to be Viber soon. And, we'll see. We'll see.
Yes, because you're something of a personal finance guru, aren't you?
I would like to believe that I am. I'm conducting some seminars also. I'll be in Cebu on May 14. I'll be conducting another seminar in May 28 in Manila. So maybe.
Well, so tell us a little bit about that. What's your message? Who are you talking to? What do those seminars look like?
Okay. We, like I said earlier, I run 5 companies, and one of the companies is Finance Page Seminars. So Finance Page Seminars, the target market are mostly entrepreneurs, self-employed individuals, and we have different seminars from ranging from taxation, accounting. We have different point persons per topic. So my topic of specialty is on stock market 101, and entrepreneurship. For other topics, there are other guys who do that. So we just divide our labor onto who specializes that topic.
And give us a flavor of the other companies that you run.
I have a IT company, so we create software, mobile apps. Also have a insurance brokerage. I also have a transport company. We have a few commercial vehicles for rent. I treat the Popular Investor as a business, so that's the 5th. So planning to also write some books. Actually, I have some already in progress. So it's part of the Mark Fernandez business unit.
Sounds good. And how much of your time would you estimate you dedicate to eToro?
In the morning, since China markets open at 9:30, I spend around 9:30 to 10:30 just to see the market open. Then the Chinese markets close at 12. They have a noon break, 12 to 1. Usually by 1 o'clock, the employees in charge of discovering stocks should have the Google Sheets ready. So we have this Google Sheets, and they put those stocks that I need to check on. So there's an employee who does the discovery of the stocks. And also by around 1 o'clock, or usually the one doing the maintenance of the existing portfolio is already done. So by around 2:30 to 3:30, I do check the portfolio for stocks that I need to sell or I need to add up. And then I also check some stocks, shiny stocks that I should be buying based on the discover list that was generated by employee 1. By around 9 o'clock to around 11 o'clock, I do the trades in the European and in the American markets. So that's how much time I spend. But if you look at the number of employees doing this to feed me the data that I need, that's 3 people.
Wow, you've got 3 staff working on the eToro side of things.
Yep, 3. So one is on the discover stage, tries to discover what stocks are good. The other one is on the existing portfolio to see if there are relevant information that necessitates selling the stock. And the other one is the research guy. It's really more of once I signify this is something that I'd like to check on, they do further research on the financial statements. You see, I don't really trade based on news as much as, though I do base some trade on news, but it's really more of the financial statements. And if you look at the portfolio that I have, the price or earnings ratio of the existing portfolio is around 8, which is quite low. If you look at the price earnings ratio of the US markets, around 16, and the other markets are also around that range. So if you look at the portfolio that I have right now, it's really based on financial data, something that can be replicated by anyone.
Okay, well, we're going to look at your portfolio in just a second after this.
Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club. Do you copy?
Do you copy?
Do you copy?
Do you copy?
Copytraders Club.
Copytraders Club.
Okay, Mark, let's have a little look at your portfolio. Let me describe to the listener a broad brush description. It's quite easy to explain. It's all stocks. There's no crypto. There's no ETFs. There's nothing but stocks, 100% dividend stocks. And as you said earlier, US accounts for 40%, Europe 35%, Asia 25%.
Yeah.
So you're all about the dividends, it seems.
Yeah.
And I've seen you've made a video explaining to people how they check receipt of their dividends on eToro.
Right.
It's not something that eToro does particularly well, I'm sure you would agree.
Well, in terms of the dividend
Yes.
on the education,
No, like displaying the dividend returns and dealing with dividends generally.
right. Actually, I've already informed eToro before that the stats of the popular investors are quite understated because the performance is based on profit and loss. It does not include any dividend returns. So I was suggesting before that there be like a slider where you can like turn on include dividend returns in computing the returns. So like for January, it's 1.23 gain plus like a few 0.05 for the dividends. So there should be like a slider where you can turn on, turn off the returns to include dividend gains.
Yeah, that would make a huge difference to someone like you.
Yeah.
For example, in 2021, your 27.58% annual return stat, do you have any idea what that would be if dividends were included?
I computed the dividend yield for 2021. It's around 5%. So that should be around 32, if I'm not mistaken. But of course, there are taxes. Like the US has a 30% tax rate. China and Hong Kong 10%. Europe like around 30%. So maybe net of tax that would be around plus 3.5% or plus 4. So that would be 31 or 30.
Well, I was going to ask you about withholding tax because I was talking to Felix Falix, the guy who has the YouTube channel, all about eToro. And it's one of the things that annoys him is that, to his knowledge, all eToro clients are charged 30% on US dividends. And technically speaking, if a UK citizen has signed that W8BEN form, that should be 15% because of the tax treaty between the US and the UK. But it's not actually applied correctly. So he's being charged 30% withholding tax.
Right.
Do you know how much that differs from country to country? I mean, in the Philippines, are you charged a full 30?
For us, if we invest in eToro and we get a dividend, it's 30. Yeah. But for Filipino stocks, it's 10, which is quite weird. I've always been wondering why you would tax dividends when in fact the net income was already taxed. It really bothers me actually when, for example, you make 10 of an revenue and let's say you make 5 of a expense and then there's an income tax of like 1. So 10 minus 5 minus 1 is like 4. So the 4, and then they give, let's say, half of it as dividends. So they give 2 as dividends. And then you're going to deduct again a tax on the dividends. I think that's like double taxation because like you already taxed the net income and then you tax again the released net income. So there's like they're saying don't release any dividend.
So let me describe your portfolio a little bit more. You've got 59 stocks, nothing above about 4.67% in the invested column. So that means you've got a lot of small positions.
Yeah.
So we wouldn't expect much desynchronization between your portfolio and a copier's, or where it does exist, it's going to be relatively inconsequential. But let's see. One thing I like to do is compare your current top 5 positions with what a new copier's top 5 positions would be. So if your current top 5 positions are 1, 2, 3, 4, 5, a new copier's would be 3, 1, 36, 2, and 14. So there's clearly some desync going on. And let me explain those two anomalies. One is Polymetal International, 1.22% of yours in the value column, but is originally 3.90 because that's had a huge drop, obviously. And the other anomaly is 2007.hk, which is Country Garden, which similarly has had a big drop. Not as big, but it goes from 2.29 in your value column to 3.03. So although that top 5 makes it sound like there's loads of desynchronization, there isn't really. What's your approach to synchronization?
Synchronization, I always ask the copiers to regularly check their percentage available cash balance compared to my available cash balance. So for currently, my available cash balance is 4.88%. So I always ask them to check if their available cash balance is above 4.88%. And if it's above 4.88%, then they're good. If it's not, then they should add more funds and uncheck copy open trades.
And you say you trade a lot as well, so that helps to keep things in sync, I suppose, if you're trimming and adding.
Right.
As you also mentioned before, there's a Russian bank in there, SBER Bank. Is that how you?
Sberbank.
Sberbank?
Yeah.
You have to be careful how you say that.
I'm not sure how it's ready, but SBER Bank.
And that's the largest desync for obvious reasons.
Yes, it's 99% down. But if you look at the stats of this stock, which is actually a cool stock, if it hadn't been for the war, you look at the dividend yield, it's 2,049% dividend yield. Because for the past 12 months, that this stock paid a dividend of 0.8196 USD. And the stock is currently trading only at 0.04. So like I told the copiers, I told them, if this bank will eventually start giving out dividends, we could actually recover in a few months or years the losses. So from the dividends. So it's not significant though. This is just around, I think, how many percent is this bank invested? It's only 1%. So I've already predicted how much is the total loss should Russian stocks really go haywire. That's around 1% for Sberbank. The others are Polymetal, 3.9. So that's around 4%. Kiwi is another 3%. So 1 plus 4 plus 3, it's around 8%. So probably an 8% loss. But the Fairexpo, this company, Fairexpo, it's not a Russian company. It's I think a European company, UK, if I'm not mistaken. But they have mines in Ukraine. So the stock price went down. But if you look at the dividend yield of this stock, it's around 75%, 75.60% dividend yield. I personally don't like to sell these stocks because I'm just waiting for the dividends. And it's not that much, the total invested for all these Russian affected stocks.
So all your picks pay dividends, correct?
Yes.
Do you find targets by only looking then at dividend payers? Is that how you begin your process?
Yeah. Our discovery phase only focuses on dividend payers.
Okay, and tell us about how you seek a balance between company performance and dividend payout. Really, well, the question I want to ask is, can a healthy dividend create a bias that prevents you seeing weakness in the business?
No, dividends is not the priority. In fact, in the order of priority, it number one is past performance, number two is health, and number three is dividend. So dividends only ranks three of the priority in assessing the stocks. So we always look at the past performance and future projections first, and then of course the financial health, which includes the debt to equity ratios, and how it compares with other companies on the same industry. And the third is the dividend. So when you say dividend, how consistent are the dividend payouts? And in terms of the percentage of the payout, how much of the income is being paid out as dividend? Because like there are some companies that give a large dividend, but the dividend payout ratio is significant. Personally, I'm not impressed with companies that give so much dividends, but they have a very high dividend payout ratio. So, so it's not part of the main list that we check. It's really more of past performance, health, and then dividends.
Okay. Yes, because just because a company's paying a dividend doesn't mean it's doing well.
Correct.
In fact, sometimes it means the opposite, paying out a dividend to make it look like they're doing well.
Yep.
Tell us a bit more about that. Educate the listener. Like what? Well, I don't want to say what is a dividend, but you could start there, you know.
Yeah. Well, basically, there are companies that do not declare dividends and companies that do. And so, in the fund specifically, we only focus companies that give out dividends. There's a reason to that because a significant amount of our family's savings are actually invested in eToro, and my wife also copies me in eToro. So we are both Platinum Plus members in eToro, and so since a significant amount of our money is in eToro, a significant liquid amount is in eToro, we personally chose not to invest in companies that don't pay dividends because of the risk involved. We envision the fund as something that people will put money for the long term. It's not a money that they plan to like use in the next 1 or 2 years. It should be more than 2 years. And so it could be like for your retirement fund or like your funds for the school's tuition fees of your children. That's how we see the fund. And so if we invest in companies that don't give dividends, like for example, the stock price goes down from 5, it goes to 4, 3, 2, and then it goes 2 for the next, let's say, 5 years. I think it would be unfair for us and also for the copiers to not receive any compensation for putting the money in eToro or for buying that stock for the matter for the next, let's say, 4 years, and not receiving any compensation. My thought would be like, it should have been better if I just placed this money in time deposit than just buying this stock. So I personally think that if a stock price goes down, I don't immediately sell it just because the stock price is down. So we have to look at the fundamentals, the past performance, in the health of the company. And if it's all okay, we won't be selling it. We just have to hold on to it. And we'll just wait for the dividends, and maybe we just have to think of it like a time deposit for the next 5 years. And if it goes up, then good. Then if it doesn't, let's just wait for it to go up. So that's how I see it.
Isn't there a danger that prioritizing dividends can lead to certain industries being overrepresented in your portfolio? For example, I'm seeing a lot of home builders and home building materials companies, cement, concrete, polymers, metals. The construction or real estate companies include MDC Holdings, KBH Home, Pult Group, Lennar Corp, DR Horton, all in the US. And in the UK, you've got Red Row and Savills, I suppose, could be included. Then in China,
Yeah.
we have Country Garden, China SCE. In this part of the conversation, we discuss portfolio construction. And in your case, your portfolio is construction to a significant extent.
Yeah. Well, when your question was, is there some sort of skewing to a specific industry? Yes, I think there would be some skewing. In fact, as you might have seen, you might not be seeing some tech companies in the portfolio precisely because they don't give dividends. Well, most of them they don't, and so if they don't give out dividends, we won't be getting them. And so I really go into the basics just really when I select stocks. I'm really more onto the price earnings ratio and the growth rate of the earnings per share because I think that's the fairest way to assess stocks, price earnings ratio and the growth rate of the earnings per share. Because, honestly, if we view stocks based on these premises, these price earnings ratios and these growth rates, it actually allows you to see if the company is priced properly or not. So I don't know if it's like just me thinking that sometimes the stock market is just unfair for certain companies and some companies are really benefiting from a high rise in the stock price when in fact the PE ratios are way way off the charts, and there are certain companies that are really doing well, but in terms of PE ratio, they're like 2, 3, 4, 5, which is really, really low. But a lot of people are not investing in it, even if the projections for the growth rate are really good and the past performance are also really good. So if we don't base it on some metric, really, it would cause certain companies to be overvalued and certain companies to be undervalued. And I think it should be fair for people to really just go for companies that are not overvalued based on the PE ratios and the growth rates of the earnings per share.
Okay, so you mentioned earlier about how the portfolio has been doing during recent months. And I came across an article on your website, which is entitled Reasons Why People Are Afraid to Invest More When the Stock Market is Going Down. Can we have a little look at that article? So the first reason you quote is, number one, they feel that the market will go down further.
Yeah. So people don't invest more as they should because they feel that the market will go down further. The price earnings ratios of the companies that I have are really, really low. And so if the price earnings ratios are low, that means if you convert the price earnings ratios to earnings yield, which is 1 divided by the PE ratio, the higher the earnings yield, the higher is the possible dividend. And so if you take a look at the companies that I'm buying, the PE ratios are already low. And so if the market will go down further and you just sell the companies that I have, maybe to cut loss, which is okay, not a problem. But if you're in there for the long term, I think that shouldn't be the case because the PE ratios are already low. And if they're low, I think in the future they'll just go back, But I think there's really a need to educate the public in terms of really being able to identify metrics in terms of assessing the stock. Because recently it's really more about discounted cash flow or DCF, which is very subjective. And so if it's PE, it's really easy to assess, and the growth rates are also easy to assess in the sense that these analysts also say if they meet the analyst targets in terms of EPS or not. So for me, DCF is okay, but DCF alone isn't really a good way. So they shouldn't really be afraid to invest more because it's really cheap, most of the stocks.
The second reason you quote, number two, second reason why people do not invest in stocks is because they think the companies invested will go bankrupt as the price continues to go down.
Yes. There is this notion that if the stock price goes down, the company is about to go bankrupt. But in reality, um, the stock price going down doesn't really have a major effect on bankruptcy. Bankruptcy occurs when the company is not able to sell the products that they're actually making. So if the company continues to make the products that they're making and continues to sell those products, then these companies shouldn't be bankrupt even if the price is going down. I would say the reason why the price is going down is it's just not properly getting enough visibility among investors. So visibility doesn't really mean it's going down.
Yeah, there can be all sorts of reasons for a declining stock price,
Yep.
which aren't that relevant to the long-term fundamentals. Thirdly, they feel the market will no longer go up again.
Okay. Well, I strongly believe that the market will always just continue to go up. The fact that inflation goes up means that the prices that the products are being sold is going up. So if the prices of the products are going up and the volume of the products that are being sold are equal or a little lower than it was, then the revenues will most likely be steady, or the revenues will also go up. So the beauty about stocks is that for most companies, especially companies who hold real or physical assets in their balance sheet, if the inflation goes up, usually the stock price also goes up. And so hence the reason why I have several companies invested in properties and in metals. These companies have book value. So if worst comes to worst, if the company goes down and there's book value, at least there's room for recovering a portion of the investment, so long as it's not a CFD.
Mm-hmm. So you're talking book value, price to earnings ratio, dividends. You're very kind of old school.
Yeah, earnings growth, old school. Yeah.
So does that all mean that you've been adding funds recently in the current decline in the market?
Yeah, I do. In fact, if you look at my wife's portfolio, because I just give the money to my wife and she just keeps on copying me. So on my own personal funds, on my own personal eToro account, I don't usually add more, and there's a reason to that because I try to challenge myself not to frequently add funds because some copiers might not also have funds to add. So I just try to challenge myself to sell those stocks that should be sold, and then buy from the available cash balance instead of adding funds. But in my wife's personal account, that's where we regularly add funds.
So Mark, can you describe for us what profile of person should copy you?
Well, basically, people who are planning to invest in the long term, I would like to believe that since even us personally, we invest a significant amount of our funds in eToro, I would like to believe that it's a fund that you can put your retirement savings in, or your funds for your child's education. Um, these are people who are probably not so aggressive, but are in for the long term. Those kinds of people, and even those who are starting to invest in the stock market, can also invest in these funds.
So who are the kind of people who shouldn't copy you?
I think people who are impatient, who want to invest for like 3 months or 6 months or a year, those are not the people that we are targeting.
What role should you as a PI play in a copier's portfolio? And can you describe what you consider the ideal copier portfolio to look like that includes you in it?
It depends. If the person is trying to invest for the long term, I think the person can go for a mixture of dividend stocks and some high earning or high growth stocks, like probably even companies that don't give out dividends, because they have room for maybe recovering from possible losses. But for investors who probably are looking at 5 years in their time horizon, probably these can be more on dividend stocks, probably 50% or more in dividend stocks. But for those who are really long term, they can have some, like, a smaller amount of dividend stocks, probably 30%, and more on high growth stocks.
Do many of your copiers copy only you?
I would like to think so. Most of them are first time stock market investors or first time copiers.
Okay. Are there any other changes you would like to see on eToro other than what we discussed about revealing dividend returns? I imagine you would say automatic reinvestment of dividends.
Well, automatic reinvestment in a sense that it automatically buys those companies. Automatic reinvestment is not in my wish list. Probably more on how the eToro platform presents information, specifically on the copier side. For example, you have to manually compute how many percent of your funds is available cash balance. So you could be able to compare how much is your percentage available cash balance versus the percentage available cash balance of the person you're copying. Also, in terms of the amount invested in eToro, I think there's something wrong with the amount invested. If you look at the dashboard for the amount invested, it does not include withdrawals that were made. That's something that I already told eToro about. So, like, the amount invested is, let's say, 58, but there was a withdrawal of 8,000. But in the portfolio dashboard, you can see 58 and not the amount less the amount withdrawn. So it could be a little tricky actually for some people to see that in the dashboard, because it doesn't include the withdrawals made. So you might be thinking that, hey, my value is only 40 and the amount invested is 58. So, but in reality, you made, let's say, a withdrawal of 18,000. That's why the amount invested should be 40 and not 58. Other areas might be probably more of a referral system. This is part of my wish list. Like, for example, most of the time, I'm the one who introduces them to eToro for the first time. I'd also like to believe that some of my copiers also introduced their friends to eToro for the first time. And I said a while ago that we own an insurance brokerage, and we have like financial advisors and life insurance agents on the ground. And so I'd like to give opportunities for these financial advisors and life insurance agents to earn money by referring their existing clients to eToro. And so what I think I've already informed eToro about this, was like there should be a way for people to monitor at least who referred this guy, and probably give some sort of an incentive to the financial advisors or the life insurance agents who actually encourage them to invest or to copy me. So if by doing so, I think it would increase the number of people who will be investing or copying in eToro.
You mean beyond the usual affiliate links?
Beyond that, it should be more of like, not more on the registering to eToro. It's more of copying the person that should be copied. eToro can do that in many ways to source out the funds. They can, like, get it from the income of the popular investor, or whatever way is better.
What other popular investor would you say you know best on a personal level?
What? Who? What? Who? I can't.
Do you know any other popular investors?
Oh, well, I have seen some presentations from J Nemesis and the other guys who are in the top spots. But more of the Filipino popular investors. I know some of them because we have like a FB group with the other Filipino investors. But for the foreign ones, I'm not really connected much to them.
And as for the ones in the Philippines, have you met up before for lunch or?
No, we haven't. But there's this FB group, Facebook group, and you know, I know they're a popular investor because they post about their performance, and they're encouraging people to invest, and we just say, hey, keep up the good work, and but we haven't really had some lunch together or anything.
Okay, final question, Mark. What question do you wish I had asked you during this chat that I haven't?
Maybe why should people invest in you?
Have I not asked that?
Maybe you have, maybe not. I haven't really answered that question, I think.
Well, okay. Why should people invest in you?
Yeah, despite the declining performance of your fund.
Okay. Consider that question asked.
Okay. Well, if you look at the fund again in terms of the PE ratios and the projected growth of the earnings of the individual stocks, you'll see that the PE ratios are really low. And so I would like to believe that it wouldn't go further lower than it is right now. But if it does, I think it should recover in once things go well with the Fed, So everyone's just afraid that the Fed will raise again the interest rates. But considering how low the existing funds are in terms of the PE ratios, and considering that the fund regularly gives dividends, if you just copy me and you just like leave it for the next 2 years, I'm certain that there would be positive gains. And I'm sure that in terms of your mental health, you won't be really scared frequently that you'll lose money, because we really monitor everything, just like how I monitor my own funds. So maybe that's why you should copy my fund.
All right, Marco, it's been very interesting to chat to you and get to know you. You're the first guest we've had from the Philippines. And if ever I'm popping over to do a bit of diving, I will let you know if I'm in the vicinity.
Sure. There's a lot of dive spots here in Dumaguete.
Okay. All the very best to you, Mark. Good luck in the future.
Thank you, Gavin. Thanks for having me.
Mark Fernandez there, showing us there are indeed many ways to eat an orange. His focus on low PE, earnings per share, and dividend payouts is yet another approach aimed at navigating a way to success in the markets. It'll be interesting to see how he fares over time. His approach may become more appealing to copiers in the current and future market cycles. Only time will tell. That's all from me. See you on Discord and Facebook. Until next time we meet at Copytraders Club, I wish you many happy returns. Obviously, anything you hear in this podcast is for entertainment only, not financial advice. Do your own research. It's just generic chit-chat. We don't know your individual circumstances, etc., and so forth.